Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically we are covering the Indian banking system. Okay. These are the topics which we had planned to discuss in this particular series of the Indian banking system. Okay. So far we had completed with the you can say generation of the banking. Okay. And now we are left with the banking sector development 2014 onwards and the risk in banking. Got it? So before start this session, what we do, we will just do a little bit revision. Okay. So basically, if we talk about the generation, so as we know, there are total how many generation? There are total 4 generations in the banking. Got it? If we talk about the first generation, then it is basically pre-independence era. Okay. Pre-independence era. Got it? If we talk about the second generation, then basically it is between 1947 to the 1967. Okay. If we talk about the third generation, it is between the 1969 till the 1991 or 1967, you can also call it. Thereafter, the fourth generation is from 1991 till 2014. Okay. So this is the timeline of the generation. Got it? This is very, very important to keep this timeline in your mind so that you could connect the things in the right manner. All right. Remember, in the pre-independence era, there is no particular timeline. Okay. Because it is started from the ancient time and covers till the 1947 banking. Okay. It means that ancient banking practice, medieval banking practices, and even the modern banking practices before the independence included in this particular generation. Okay. When we talk about the generation, basically this denotes the banking practices and banking, you can say facilities available on that time. Okay. Banking practices and the banking facilities available on that time. Got it? So this is just you can say then just an overview of the previous you can say topic which we had covered, generations of the banking. Okay. So now in this particular lecture, we are going to start with the banking sector development 2014 onwards. Okay. So let's start. So this is the 2014 onwards, and 2014 is also very, very important. Why? I had told you this was the year when the Erstwhile Planning Commission was changed and converted into which particular body? Into the into the National Institution for Transforming India. Okay, or in short, we call it as a Niti Aayog. Okay, so keep these things in your mind. Planning Commission converted into the National Institute for Transforming India. This is what we had seen in the economics point of view, or you can say in the key national institutions point of view. Now the question is, what is the significance of the year 2014 when we talk about the banks? Okay, like what is the significance this particular year possesses? So this is basically the Jam Trinity. Okay, Jam Trinity. So what do you mean by the Jam Trinity? Let's see. From 2014 onwards, the Indian banking sector has embraced the JAM, Jan Dhan, Aadhaar and Mobile Trinity as a key strategy for enhancing financial inclusion. Now, here is 2 questions could be designed from this particular para only. Okay. First question is that Full form of GEM. Okay. It is the first. Second is the year of launching of GEM. Okay. These are the two main questions which could be derived from this in this para only. Okay. So if we go by the first one, it means that GEM full form. Then GEM basically stands for Jan Dhan, Aadhaar, and mobile. Okay. This is the trinity. It means that these all are combined together. All right. If we talk about the particular year, so these were established in the year of 2014. Okay. And that's why we had you can say the topic like the banking sector development 2014 onwards, because in 2014 we had introduced the particular GEM trinity. Okay, stands for the Jan Dhan, Aadhaar, and mobile. This approach aims to leverage the technology and innovative banking solution to reach the last mile of the population and provide them with access to the formal banking services. Okay, like there's one thing which I would like to tell with you, or you can say, let me try to build, you can say, bridge for you before we go from the initial phase to the final phase. So there must be some bridge. Okay, so let's start discussion over that particular bridge. It was during the 1980s to the 1990s when the India was expressing the internet and you can say computer booms. Got it? Even when we were discussing the fourth generation, we had discussed on it. Okay, the internet and computers were being introduced during this time period. All right, and from this time period to the upward, you can say during the 21st century. During the 21st century, okay, till 2000 to 2014. Okay, in India, there were so many mobile phone and internet users. Got it? It means that we were doing good in the terms of digitalization, digitalization. Okay, and what happened during this time period? That we were increasing in the mobile numbers and the internet users, but when it comes to the bank holders, the numbers were very inadequate. It means that we had a large group of population using the digitalization services, but when it's come to the banking and the financial literacy and the services, there was dissatisfaction by seeing the numbers. Got it? So basically in this treaty, or you can say trinity, GEM trinity, what we basically tried to connect the banking and financial services with the people through technology. Okay, banking and the financial services connected to the people through the technology. Got it? Here you could also read it. Approach aims to leverage the technology and the innovative banking solution to reach the last mile of the population. Okay, so that they could find the access to the formal banking services. All right. Now here is a Jan Dhan Yojana. In short, known as the Jan Dhan Yojana, but in the long form, it is known as the Pradhan Mantri Jan Dhan Yojana, PMJDY. Was launched on August 2014 to ensure access to the financial services such as the saving accounts, remittances, credit insurance, and the pension to the undeserved and unbanked population of India. This scheme aims to provide every household with a bank account, thereby promoting the financial inclusion. Now, here is the actual picture we should see. Okay, Jan Dhan Yojana. So far, we have just taken the, you can say, the introduction of Jan Dhan Yojana. Now, what we will do, we will try to understand it better. Suppose this is the bank. Okay. Again, the prime function of the bank is accept deposits, grant loans. This is the prime function of the bank. Okay. On deposit, they give interest. Okay. On loan, they take interest, right? General working, you can say. But here is also one thing. All right. Capital plus deposit, it's the total, you can say, liquidity of bank. Okay. Initial capital invested by the stakeholders of the bank, and second are the depositors who had deposited their money with the banks, formulates the total liquidity. Okay. So what banks try to do? Banks try to put a minimum limit, or you can say minimum account balance also. Why it is happening? Because suppose if this is Mr. X, or you can say Mr. A. Okay. If Mr. A is having the account in the XYZ, what will happen? The XYZ is become liable to provide the security and the services to Mr. A. All right. And even the Mr. A is entitled to receive the interest from the bank because he has deposited the money, and deposits money is the part of the total liquidity. So ultimately the bank will become liable to pay some interest to him. Okay. So what bank tries to do under the minimum account balance scheme, or MAB in short, they states mostly in the banks there is a rupees 10,000 is the limit. It means that if Mr. A wants to continue holding the account in XYZ and avoid any charges from the XYZ, he has to maintain rupees 10,000 in his account every time. Okay. The time period, or you can say during the certain time period, if the amount is below 10,000, it means that he will be liable to pay some charges to the bank, which are called as low account balance charge. Got it? So this kind of conditions are basically with the private banks. In public banks, you can go and open your account. There is no minimum account balance, but in private banks there is minimum account balance, because in the previous lectures also we had seen that these are basically depend on the people for their liquidity. They are not funded by the government and any other, you can say, the main authorities. All right. So that is the main issue with the bank services. Why? Because if the person is capable to hold rupees 10,000 in his account, there is no issue. Okay. He could only just sign the document and then maintain the amount. But if we talk about, let's suppose Mr. B. Mr. B monthly salary is 8,000. Okay. So do you think that he is capable much to maintain rupees 10,000 in the bank account every time? Is it possible? No, not possible. At the time period when the amount is below the limit, what will happen? Charges will be applicable on Mr. B. That is the reason that the mostly people try to avoid the bank account. Okay. They do not want to open it. Why? Because they know that there must be some minimum account balance requirements and they could not meet it. Okay, so first thing, this lead to the financial exclusion. Okay, because if you want to use the banking services, the minimum you can say condition and the requirement is that at least you having a bank account in that particular bank or in any other bank in some circumstances, but mostly they prefer that if you having the bank account in that particular bank only, then you will be easily available to get the credit and all the facilities. Well, suppose if we talk about the XYZ, so if you having the account in the XYZ, then only you could explore the loan facilities and all. But if you do not having an account in XYZ, you will not be benefited. Okay, so if we go by this scenario, so the large chunk of the population which is not capable to maintain the minimum account balance, all right, these are generally avoiding the private banks and marching towards the public banks. Okay, and because the public banks also having the resources in the limited manner, so these are under pressure on that time. Okay, second, what was happening? There was a financial instability because the public banks are provided the services to the many of the people, and due to this they were having the pressure on their resources and their management as well. Okay, so to counter this kind of situation, in the Jan Dhan Yojana there was some measures were taken. Okay, and these measures were basically known as the no frills account. No frills account, which is also known as zero balance account. Okay, now what do you mean by it? What do you mean by no frills account or the zero balance account? Basically, these accounts do not having any minimum account balance criteria. Okay, it means that suppose if Mr. A having the account in the XYZ, which is now under the category of no frills account, or you can say zero balance account. If this is the category, so the Mr. A is not required to maintain any minimum balance in the account forever or every time, you can say. Okay, so this is basically done to make sure that the people who got financially excluded due to the minimum account balance requirements, okay, will now get attracted towards the bank accounts, because now they are no longer required to put the money in the account for you can say to maintain the minimum account balance at every point of time. Okay, thereafter Jan Dhan Yojana and now the Aadhaar integration. Aadhaar, India's biometric identity system, has been integrated into the banking sector to streamline the process of opening bank accounts and conducting the transactions. Okay, now it is a very interesting point. Okay, so if you and some member of your family, especially your parents, okay, just ask them if they're having the bank accounts, just ask them how the bank accounts used to be open in their time. Okay, just ask them, you will get a better understanding and idea what I'm trying to say. Okay, so if we talk about the bank account opening in the 2000 to 2010 and prior to it, okay, this was an hectic job, or you can say this was an tough job. Why? Why the tough job? Because the banks were having so many formalities and verification processes. Okay. So because of this, what happened? That was a time taking process. Okay. And on average, if I'm giving an example, all right. So at least if you are going to open the bank account, you will require a 1 month or more to get your account in a fully functional form. Okay. That was the minimum time period on that time if you go to open your account. Okay. So that was a tough job. Formalities and the verification process is too long. That wasn't time taking processes. Because of this, you can say the common man generally avoids to having the accounts in the XYZ or any other bank. Why? Because they do not want to spend this time period and that all the things. Okay. And even it was not so good for the bank. Not only they were losing their customers, but also because of the so many formalities and verification processes, there were the chances of generating the loopholes in the authentication processes. Got it? So to tackle this kind of situation and to maintain the streamlined flow, you can say what's happened that Aadhaar interrogation or Aadhaar, you can say integration was become the part of reform. Okay, because if we talk about the Aadhaar card, okay, we know that it is a uh, biometric identity system. We all have our Aadhaar cards. Okay, and Aadhaar cards is basically based on the biometric of the person and the personal details. So there are very less chances of being fake. Okay, because if you are showing me the card, you say that I am Mr. X, but by doing the biometric, it revealed that the biometrics meet with Mr. A. So you will be easily caught. Okay, because there is no way to being fake while we having the biometric identity system. Okay, so this was a safe and sound system, so that it was, you can say, inserted in the opening of bank account. Okay, so if we talk about the today's scenario, all right, so suppose if this is any bank, for example, this is an XYZ. All right, so nowadays there are two ways to open the accounts. First is the online way, second is the offline way. Okay, in offline way you have to visit the particular branch of the XYZ where you have to fill the consent form and you can say discharge all the liabilities, and then they will make sure that you go through the process and your account will be open. All right, this process you can say is much shorter than it used to be prior to the Aadhaar integration. Okay, in the online way you could download the app or you can open the website of XYZ, then you can apply for account holding. You have to fill some online forms and then they will be conducting the eKYC. Okay, electronic know your customer process. Okay, KYC stand for the know your customers. We will discuss the KYC in the upcoming lectures in a proper form. Okay, in KYC generally they put a video call. On video call they see you. Okay, they click your pictures so that it could be identified that who opened the account, and they generally ask for two identification proofs. The first is the Aadhaar card, and second one is a PAN card. Details of the Aadhaar card and PAN cards match together, like your name, your date of birth, and all the things. And once the things done, you will get your accounts ready for the transaction within 24 hours to 48 hours. It's basically depend upon banks to banks. Okay. So now you could see whether in the, you can say, previous form, it will taking 1 month or more to open the account. Tough job, formulations, you can say verification process, time taking process, loopholes were there. But after the reforms, what happened? It's just in a two-way, whether to go to online way on the offline way. Within 24 to 48 hours of the application, you can say pass, you will get your Aadhaar open. Okay, so this is the Aadhaar integration. Okay, Aadhaar authentication has made it easier for the individuals to access the banking services and receive the government benefits direct into their accounts. Now it is the, you can say, the last thing which I will tell you, and the rest we will cover in the next lecture. Suppose this is the government. Okay, and this is the person or the beneficiary, you can call it. All right. So if the government wants to send any amount to him, so it has to be passed through various departments, or you can say channels, then it will reach them. Okay. But after the Aadhaar integration, there is only one channel. The beneficiary has to open the account in any particular bank which is included in the scheme by the government. The government will transfer the amount to that bank. The bank will transfer the amount to the beneficiary's account. Okay, so all these channels bypass and the conditions of the corruptions eliminated. Got it? So students, basically in this lecture we had taken an overview of the GEM Trinity. Okay, we had discussed the Aadhaar integration and the Jan Dhan Yojana. In the next lecture we will continue with this same topic. Till then, just revise all the facts and figures we had discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.